Let's get a perspective on what the outlook in terms of RBI rate action going forward is going to be. We've got the credit policy next Tuesday, and we've got Madan Sabnavis right here with us in the studio to tell us, give us his view rather of what he is expecting come Tuesday. Madan, the market predominantly believes that you aren't going to see any action on the repo rate front, but do you believe that the CRR could possibly be tinkered with?
Yeah, I think the RBI will probably go in for a CRR cut rather than a repo rate cut, because if you look at overall economic conditions, there's not been too much of change in terms of both inflation or in terms of growth. The IIP numbers were marginally better than what they were earlier, but nothing to really give us comfort. And in terms of inflation, I think both the retail prices as well as wholesale prices do show an upward tendency. So we're still talking of inflation well above the RBI's comfort level. And therefore, I don't think there is enough justification for any kind of cut in the repo rate. Now, in terms of CRR, I would not really attribute it more to liquidity issues. It's more on account of the fact that the government of India has taken several measures in order to keep its own house in order, not just the fiscal deficit, but also on the policy front. So I should tend to think that there could be some kind of pressures, so as to call it, on the Reserve Bank of India to also do something on the monetary side, and therefore to reduce the CRR. And since lots of bankers have also been talking in terms of a reduction of the CRR could be a good prerequisite for them to lower interest rates. So actually the onus would be now on the banks rather than the Reserve Bank of India once the CRR is reduced.
Madan, afternoon. If you look at the situation from a purely tactical perspective, be it the inflation numbers or the IIP data, growth continues to remain a problem. But if you also look at it from a strategic perspective, you have seen a lot of reform measures coming through. So there is an intent to bring the fiscal deficit down. So keeping all of these factors in mind, what is your overall outlook for the growth for the Indian economy?
I think growth will continue to remain subdued for the rest of the year. When I say subdued, we're not really talking in terms of major recovery. I do believe that things have bottomed out for the Indian economy. So things are not going to get worse, but the improvement is going to be of a very gradual nature. So we're actually looking at growth moving towards the 5.8, 5.9% region towards the end of the year. Provided, of course, we do see a certain kind of a rate cut coming in, probably towards the end of this calendar year and maybe another during the beginning of next calendar year. So we're looking at December and March being the 2 points where there could be 25 basis points cut in interest rates, and probably a minimum kind of slippage in terms of the fiscal deficit. I think the concern is back on the fiscal deficit, because it's notwithstanding the fact that the government has announced certain measures, there's still concern in terms of whether the disinvestment program will be able to garner the kind of numbers which they spoke of last March, or even in terms of the spectrum auction getting in with 40,000 crores. So even though today we are proceeding on the basis of the borrowing program being reined in, because even the second half calendar says that things will be just about what was budgeted for, but we do expect a considerable amount of slippage both in terms of revenue collections as well as disinvestment and spectrum sale.
Sure. So, interestingly, Madan, the entire market seems to have priced in a slippage, and everyone's talking about a number of something like 40 to 50,000 crores. Now, what if the government actually stays within the stated objective of, the announced borrowing programs number? If we do see them keeping that under control, where should we expect that bond yields will go? Could we expect some significant decline in yields, or do you believe that
that's an impossibility? I don't think we'll be anywhere close to the 5.1% mark, because there are pressures on both the revenue as well as the expenditure side. And I think one thing we've been hearing is that the government will start cutting down on its development expenditure, because that's probably the only component over which it has control. So even if it does that, because if you look at the total development expenditure which is projected for this year, it's around 100,000 crores. So I don't think they can cut it down by around 50,000 crores to really make up for the loss of revenue. So on the whole, I think the fiscal deficit will definitely be overshot. The only question is whether it's going to be towards 6%, whether it's going to be 5.5% or 5.8%. Our own take is it will be closer to 5.8% for this year. So we have a similar number for GDP growth as well as the fiscal deficit ratio.
And what is the number that you have on the inflation front?
I think inflation in terms of WPI will be closer towards the 7% mark towards the end of the year, provided of course the Rabi harvest is good. But we have already seen that the Kharif harvest is not going to be as good as it was last year, because I think Ministry of Agriculture has already shown that there are slippages in terms of production of pulses, in terms of oil seeds. Now these are the vulnerable commodities which are going to continue to exert pressure. So even though the WPI inflation number would be moving downwards in the next couple of months, more on account of the base year effect as well as the fact that the harvest is flowing in at this particular point of time, I should tend to think that a 7% number would be quite commendable by the end of the year. In terms of the CPI inflation, which the last number was close to 9.7%, I should think that would be between the 9 and 10% range on account of the fuel prices which were increased last month, which is going to feed into it in a more definite manner going ahead.
All right. Also, just a quick word, Madan, on the rate cut expectation. Earlier, everyone was working with an expectation of possibly a 75 to 100 basis point cut on the repo. Would you say that that expectation has gone, and that predominantly everyone believes that you're just going to see at best a half percentage point cut on the repo by March end?
Yes, I should think the 75 to 100 basis points is definitely ruled out now, because I think we all know very well that the RBI has been targeting WPI inflation, and this inflation number seems to be fairly rigid in that region of 7 to 8%. So the only question is whether it's how soon are we going to reach the 7% mark before the RBI feels comfortable enough to lower the repo rate.